All right, hello everyone. This is a short video explaining the picture I posted today, which is the 20th of February 2022. I'm going to explain a little bit of this video, which I hope by the end of this you're able to understand what I was trying to explain to you guys on the write up. So I believe a video is going to give more knowledge and more understanding of this particular concept because I've seen a lot of traders face a lot and lots of mistakes trying to understand how smart money works and trying to get a smart money pattern, especially when it comes to entries and stop loss. So first, I'm going to explain the first diagram in the picture I sent, which is the diagram one. I explained it a little bit with some write up, but I'm going to do more on the video so you guys are going to understand what I'm trying to say. So first of all, when trying to train this pattern, which is very popular, which I believe a lot of you have already seen stuff like this in the internet. Okay, so I'm just going to break this down for you, how to understand this and how to trade of this. So I've seen a couple questions on my DM asking me, what if this pattern doesn't work? Okay, what if price gets into this pattern, creates a little bit of range and then breaks the high to continue the uptrend? I see this question more often, and I keep telling you guys, this is not going to work 100%. Yes, because you're trading a game of prediction here. Trading is a game of prediction, okay? So you have to understand that this is not going to be 100% correct, okay? But sometimes the mistakes might also come from you because the setup you pick or this particular pattern you pick on the lower time frame probably is on a different direction on the higher time frame. What do I mean? What I'm trying to say is this. Probably on the 1 hour time frame, you picked this without looking at the daily or the weekly or the 4 hour time frame or even the 8 hour time frame, which means that on that time frame you might be seeing something, like a bullish structure. And then on the 1 hour time frame, you're seeing something like this. You should understand that this movement is not going to last. Probably give you a 50 to 100 pips drop or probably a 30 pips drop before moving in the direction of the original trend. So you should understand this whenever using this particular setup, okay? Or this particular pattern. That's what I'm trying to tell you. So the mistakes you could make is number one, not understanding the trend on the higher time frame. You need to understand where the market is heading and what the trend is trying to do, okay, before you pick this particular set up or any other pattern when it comes to smart money concept. Smart money concept works 100% of the time if you understand what you're doing. Okay, that doesn't mean you're not going to take loss. I still to take losses, and I can assure you that whoever is out there trading smart money and tells you he doesn't take losses, is 100% win. That's a very big lie. All right, so you should understand this and try to pick, the POIs, or probably the points I gave on the write up, which would help you spot this more in the market. Okay, first of all, what you should understand is this: whenever you want to pick a high on the lower time frame, it should be a strong high, which probably took out liquidity and move into a supply or a demand zone. Okay, you should clear liquidity into a supply or a demand zone or into your POI or a valid POI. The high should be supported. That's one of the credentials for a strong high. I don't want to make this a long video, so I'm targeting 30 to 20 minutes. Okay, so I'm just going to try to minimize what I'm trying to say here, and so I don't move into a different direction. So I stay on track and keep my focus on this particular stuff. Okay, probably in the nearest future I'll make a video about strong highs and weak lows. Then I will explain more about that. But then you should understand that this should be a strong high, and a strong high should be a supported high. What do I mean by a supported high? That high should move into a supply or a demand zone, which makes it supported. Okay, that doesn't mean they can't take out that high. Definitely. But trust me, whenever you see a strong high or a supported high, it has to clear out internal liquidity before it gets weak or get stopped out. Okay. So now once you've gotten your strong high, you've identified that the high cleared out liquidity, the next focus should be the internal liquidity. Again, I don't want to shift my focus from this particular picture, but you should understand that using this pattern, there are some credentials, or some things you have to still understand on the market. You don't know what internal liquidity is, you don't know what a strong high is, you don't know what another block is, and you're trying to trade off this pattern. Trust me, you're doing the whole thing wrong. And you might just keep taking losses over and over again. That doesn't mean this pattern doesn't work. That's because your knowledge isn't complete yet. You don't understand structure. You don't know what's a higher high or a higher low. You don't know what is inducement, which is also liquidity. You don't know what is a point of interest. You don't know those basics about smart money concept, and you want to trade off this. It's going to be a lot difficult for you. Okay, so that's what I'm trying to say here. This that I'm trying to tell you is that your high should be a strong high, and it clear that liquidity, internal liquidity also, which is a break of structure. Then you see inducement being created. Now you see inducement being created after the internal liquidity has already been grabbed. Then you see your inducement being created, and then you see a break of structure, a major break of structure into a POI. What is a POI? How do you identify a POI? A POI could be a supply or a demand zone. Okay, doesn't have to be another block. All right, you don't see me marking up other blocks all the time. You might see me marking something a full candle and I'm calling it another block. That doesn't mean I'm wrong. Okay, that could be a refined order block on the lower time frame, which I'm marking out in that particular POI. So you don't have to pick the last sell before the buy, all the time to be a POI. It could be the entire supply zone on the higher time frame, and then you refine it and pick a particular POI. The entire POI on the higher time frame could be your area of interest. Okay, so that's it. That's it. That was what I mean by point of interest. So now you have your point of interest, and trust me, markets 80% of the time moves out of either a higher time frame or a lower time frame POI. Market is always going to react off a supply or a demand zone, either in the higher time frame or in the lower time frame. Whenever you see big moves happening, trust me, they mitigated something. That's why you see the back testing is always making sense. All right. Then you have to the next step. What you have to do is to identify an unmitigated zone within your POI, which is closest to the strong high, okay, or the direction of the trend. Now you know this is a downtrend and you're seeing this pattern for a continuation. So your POI should be around here. That's what this pattern is. It's more of a continuation pattern, okay, and also a reversal pattern. Also, it could be used for a reversal pattern, probably for an uptrend, okay, and then it could also be used for a continuation pattern. This could be an uptrend coming back down, forming this pattern, and you could join in into the trend at this particular direction. So this could go two ways. Okay, that's why I said you need to understand the trend of the higher time frame before trading this and those credentials which I mentioned. So I hope you jotted that down and try to understand what that means. You need to know what you know all of those I mentioned in the past. I'm not just so let's go into the second picture here, the diagram too. Now, sometimes you don't see this happening 100% of the time, market reacting off this and continuing the downtrend. Okay, let's say you miss it. Let's say you did not focus on the higher time frame and you got stopped out. Okay, which is something like this. Let's say you did not pay attention to the higher time frame, knowing that this was an uptrend before taking a sell here, to stop loss here. And then you get stopped out and you see this high gets red, which means market is bullish. Okay. Now on the whole lower time frame, you see an internal structure being formed here, which is higher high, lower high, higher high, lower high. Now when you see your high gets red, you are expecting since it's an uptrend and you see the momentum happening. I gave some other confirmations also to help you understand this particular pattern. You have to see a slow momentum from your POI. You want to see a range within the POI over here. Okay, market did not, the volume was not high, no reaction. Instead, you just saw a range back down. You should understand that that POI is probably going to get weighed or it's going to get stopped out. So now you see a corrective move back down into a demand zone and you see market reacting off it, which took out the high. What you're expecting is market to, mitigate the closest POI. And trust me, 80% of the time, the POI is going to be created around this zone on the higher time frame. You're going to see another block being created around here, okay, which market is going to move in a corrective form back into that POI, mitigate it, and continue trend. So that's what you have to do. Whenever you see this kind of thing happening and market did not move from your POI, let's say you see the market ranging, and then it dropped into a demand zone, which took out your high, and then currently is slow in a corrective form, you should understand that the closest POI you should pick should probably be around this zone because one, you probably picked a support and resistance zone for your POI against the trend. And two, we did not pay attention to the higher time frame. I did jot that down on the notes which I sent. So this could be the two mistakes you could be making. Okay. And I just hope this is clear to you. That's what I'm going to be explaining in this video. That's what I just explained in this video. So now I just finished explaining the picture. I want us to backtest this on the live chat before I end the video. So you guys get the full understanding and how you apply this concept in the market. Okay. So I'm going to use this to explain both scenario was happening in this particular market. Now, from the higher time frame, you could see clearly this is a bullish market. Okay. But now this scenario happened here. This scenario which happened here, clearly you could see this. Let me show you. Let me just show you what I see and what I think is happening right here. Now, there's a break of structure here. Okay. And then we see this. Okay, so on the lower time frame, this was liquidity being created. This cleared out the liquidity into this IPA candle. Okay, and I could assure you this week is another block on the lower time frame, which I would pick out as a POI if I was trading this market right now. I'm doing this genuinely for what I would be doing if I was currently trading the market. Okay, so next you see on this one being formed right here, and then you see another break of structure around the same level, and then You see a break of structure, a major break of structure here. Remember, I told you guys the little range you see on the lower time frame is an internal liquidity. So this was a break of structure on the lower time frame, which is internal liquidity, and this was the major structure on the higher time frame, which is also internal liquidity on the daily. But currently, this is the break of structure or the major break of structure on the 1 hour. Okay, each time frame represents a different data. Um, a major structure on the weekly could be an internal structure on the monthly. So you have to understand that and how structure works. If you want me to give a little video about internal structure and external liquidity, do let me know in the comment section and I will look into that once I'm free. So now we see um, a demand zone here, which could probably be another block on the weekly or the daily time frame. Okay, so now we see price. Now this pattern currently looks like diagram one, which I sent, right? And if you don't understand that, let me just draw it out here. Liquidity clears liquidity, breaks structure, creates inducement, breaks major structure into a POI, and then moves back up. Okay. Now, what you see right here is an example of diagram one. All right. And then what you see happening right here, which market gave a low, momentum, no momentum, moved into a POI, which is practically another block right here on the 3 minutes or the 5 minute time frame, and then gave a strong momentum which broke structure. Like I said, your next focus should be on that same zone and seeing price coming back to reclaim that other block, which is what happened back here. They did a slow momentum back down, moved into here, broke structure, and then came back down in the London section of the next day, and then they moved back up. So this is what I'm trying to explain to you. This is diagram two over here. But looking at this on the lower time frame, you will understand that if you're waiting for a sell from this particular spot and it did not happen, that's because the higher time frame was bullish. Okay, and then they came to that particular spot and they booked structure to the upside. But if you were looking at this on the lower time frame, which this was the bearish market here, and you picked this as a POI, let's say this other block right here, okay, for a short term, remember I told you it will give you a 50 pips reaction back down, a 50 to 100 pips reaction back down before heading back up. But then you see this happening, you picked this POI, okay, before this, and then you cleared out this inducement, which mitigated this supply zone before coming back down, create inducement also, cleared it, and then drop. This is all diagram one happening within the internal structure. But then diagram two happened in the major trend because that's the direction of the higher time frame. Okay, so this is how you could use this. Now, this doesn't mean that diagram one doesn't work, both are valid, all right. But you see this happening more. You could see this scenario happening perfectly fine. Like, let me show you an example right here, which is liquidity being created here, which is also an inducement. Don't confuse yourself. Liquidity is still the same thing as inducement, okay. And then you see a break of structure here, which cleared that liquidity, mitigated this, which would be an entire order block on the weekly. So this entire zone is a POI. Okay, you see the inefficiency created here, liquidity, break of structure, then you see the mitigation into the breaker block, then drop. See, that's the same thing as diagram one. This all happens repeatedly. Okay, so you should understand this and try to use it out in the market. Give yourself a little time, but test this and try to see if you find it more in the market. So if you miss out on diagram one, and then let's say you make a mistake, you see you get stopped out. Don't try to look for a re-entry. Try to understand that probably you missed out something on the higher time frame. Go back to the higher time frame, look into it, see what you miss, and then once you understand what you're doing, wait for a retest on that zone, and you could get back. Like I said, there are two things which could be involved here. Is either you missed, the trend on the higher time frame, or your POI was picked on a support and a resistance level. You see that? Is what I was trying to say. So that's the two mistakes you could have made that would lead to something like this. So I hope this video has been helpful, and I hope you learned something from this, and this was able to clarify the picture I sent for those who did not understand it with the write up. And then probably in the next future I would make more videos, more pictures like that. So let me see your comments in the comment section, and thanks for watching. Bye.